Data, earnings, and the situation in the Middle East. Luckily, joining us now is Mike Lee, strategy founder. Mike Lee. Okay, so we're talking prices. We're talking about supply chains. We got not a great CPI read yesterday. We got a pretty good PPI read today. But when you look at what's happening in the Middle East and the Fed looks at that, Mike, does that have to change how they think about what they do with interest rates in 2024?
Well, if this accelerates and we do have another shipping crisis on our hands, it puts the Fed in a very difficult position because you'll have rising prices, yet slowing economy because of difficulty of goods coming in,
right?
A war, distraction on everything. So what I think happened yesterday with regarding the inflation numbers is used car autos were up 0.6% month over month. Okay, the Manheim used car index was reflecting something very different, and up until last month, those had moved in lockstep. So I think that may be ultimately revised. I think people are celebrating inflation being dead. I think the Fed is cutting rates in advance of economic slowdown. Right. And so if you look at default rates on subprime used car loans, they're at the highest level ever. OK, from all the banks that reported this morning, you got higher loan loss reserves based on consumer write-offs. You look at credit card debt, it's like a hockey stick up to the right. Delinquencies, hockey stick up to the right. And the leading economic indicators have been in decline for almost 18 straight months. The chart for that looks the same as 2000, 2008, 2020. And then now it's the same kind of collapse. So I think the Fed sees the writing on the wall that there's a meaningful economic slowdown in front of us, and they're going to want to get ahead of that.
Can I just ask you about oil prices? Because we did see a spike today. They've come off a little bit from session highs. But having said that, when you think about the Fed, you think about inflation. Energy is such a huge part of that. It seems like the Biden administration is doing victory laps saying, oil prices have come down. Your gas prices have come down. That's what's bringing inflation down right now. But if this situation continues to spiral, you're going to see those prices jack up once again. That could throw Jerome Powell off.
Yeah, I would say the reason why oil prices have come off is from a lack of demand.
Yeah.
Right. And so, look, the worldwide economy is slowing. The markets are doing other things, but the worldwide economy is slowing. And so you could see a temporary spike. OK, but, again, you've created an unknown here. How is this situation going to escalate? And if it doesn't escalate, if it's only a couple more drone strikes or bombs and then that's the end of it, then this is a non-event. But if this obviously, if we go to war with Iran, all bets are off.
Yeah. You mentioned banks briefly. I want to dive deeper into that, given that was sort of the big earnings kickoff that we got this morning. A few of the headlines that stuck out to me was JP Morgan just continuing to crush it, just record. It's JP Morgan versus everyone else. Citigroup disappointed in their results, coming off, laying off now about 20,000 people. How are you thinking about investing in financials and some of these big banks at this moment?
Yeah, look, JP Morgan is the only bank that I would touch just because they're, and it really has more to do with the Fed giving them First Republic. And so if you look at their metrics for earnings and loan growth and everything, when you take out that First Republic acquisition, these are very lackluster numbers, and they have been that way. And so looking at banks going forward, if the Fed does cut and JP Morgan assumes 6 rate cuts over the next year, it's going to be difficult for them to make money, because why they have been an earnings powerhouse for the last year and a half is because they can take your deposits, pay you nothing, and get 5% from the Federal Reserve. If that goes away, ideally, it's going to help trading and other aspects of the bank.
Yeah.
But it's an extraordinarily difficult environment. And I would buy the bonds of all these banks. But for that reason, I would not buy the stocks, because they're required to hold so much capital. So as big as these banks are, they're very safe. The banks that I like more down the food chain, I still like Truist. It's a regional. It still hasn't recovered from the Silicon Valley collapse, but the stocks moved from 30 to 38. I think you get up to mid 40s, maybe even 50, so you get a premium to book value. The book value is mid 40s, 5.5% dividend, still single digit multiple. That's more where I would look on the banking sector for that.
Really appreciate it, Mike. And I love that he mentioned fixed income over the stock, because they talk about that.
I bet you did. Fixed income, music to her ears. Just say it all day long.
Balance sheet is none other than what Jamie Dimon does there. Mike, thank you so much. Meanwhile, we're officially 3 days out from the Iowa caucus.